Hi everyone, Joseph here and this is Business in 10. This video is about how to withdraw from 401k, Roth 401k, IRA, Roth IRA, and Social Security for your retirement plan. Understanding how to use these retirement instruments for your retirement plan can be as complicated as you want it to be, or it can be simple. The information available can be overwhelming. So my approach for this video is to draw a straight line through the confusion and simplify this topic as much as possible. Remember one thing, you can do all the research and talk to as many financial advisors as you can. I assure you, by the end, your final decision will not be perfect. And this should be okay, because there are so many unpredictable events in life, and especially in retirement. Here's my straight line opinion. I suggest you get informed. Don't overwhelm yourself. Make your decision and adjust as you move forward. My name is Joseph Elchakia, and if you want to know more about me, please visit my website businessin10.com. I will be publishing a series of videos that will deal specifically with the issues that baby boomers will be facing for retirement. And I hope, with your help, to provide some useful solutions for all of us. Please subscribe to this channel and hit the bell button. This way you'll get notified for when I'll publish the next video. I have a blog on this video if you want to read more about this topic, and the link is in the description section below. I also have a retirement budget form that I believe can help you in a big way to figure out your retirement finances. So please pick it up. It is yours for free. I left you the link in the description section as well. The topics I want to cover in this video are 1. Social Security withdrawal conditions. 2. 401k and Roth 401k withdrawal conditions. 3. IRA and Roth IRA withdrawal conditions. 4. Consolidation of accounts. And 5. Distribution plan. Number 1. Social Security withdrawal conditions. Social Security is the most commonly used income plan for retirement. You can start receiving your benefit as early as the age of 62. The age boundaries for applying for Social Security benefits start at age 62 and end at age 70. And your full retirement age varies depending on the year you were born. Here's a table indicating your full Social Security retirement age. Take a look for a minute and you can rewind to see it again. There are many different ways to decide on the most effective age to start receiving your Social Security benefits. The simplest way to follow, in my opinion, is to make your decision based on the following 2 factors. Number 1, if you are in need for money, the decision is simple. Start receiving your Social Security benefits at the earliest possible age. Number 2, if you're not in need for money, then start receiving your Social Security benefits at your full retirement age. Just look at the table and go for it. There is one key calculation perhaps most of us would like to be familiar with and do, which is the break-even age. This is based on the idea that if you start your Social Security benefits at an early age, then you would have more Social Security monthly checks in comparison to starting the benefit at a later age. And to calculate the break-even age, the math is simple. But the unpredictable part would be your longevity, how long you are going to live. So here's an example. Let's consider 2 people of the same age and they are eligible to the same Social Security benefits. One of them chooses to retire early at the age of 62 and the other one chooses to retire at the full retirement age of 65. The difference is 3 years. The first one would receive 3 years worth of Social Security checks, while the second one would receive none until they hit the age of 65. Let's say the benefit at the age of 65 is $1,000 and the benefit at the age of 62 is reduced by 20% to $800. If you do the math, the break-even point would be the age of 77. The second retiree would have to receive their Social Security checks from the age of 65 until the age of 77 to catch up with the retiree that started receiving their checks at the age of 62. After the age of 77, the second retiree will have an extra $200 per month more than the first retiree. There are many different alternatives to maximize your full benefit that you can receive from Social Security. The calculation can be somewhat complicated, and of course you have to make some guesses on how long you will live and so on. And by all means, if you are up to the task, please go for it and maximize the total amount you are eligible to receive. You certainly worked hard for it. My simple recommendation would be, if you need the money, start receiving your Social Security as soon as you are eligible. If not, wait until your full retirement age. As simple as that. Number 2, 401k and Roth 401k withdrawal conditions. To qualify for distributions from your 401k, you have to be at least 59 and a half years old. Otherwise, you will be penalized 10% on the amount withdrawn. All of 401k distributions are subject to taxes at your current income tax rate, regardless of when you withdraw the money. Roth 401k distribution is non-taxable because the money you contributed was an after-tax money, so you will not have to pay taxes on your Roth 401k distributions. And there would be no 10% penalty applied as long as you are 59 and a half years old and have held the Roth 401k account for a minimum of 5 years. If you withdraw a non-qualified Roth 401k distribution, you will be taxed at your current income tax rate, and a penalty of 10% will be applied to the earnings portion, not the contributions. The earnings is the money you made on your contributions, like the interest, dividend, and capital gain. 401k and Roth 401k required minimum distributions. You are required to start taking a minimum distribution by April 1st after you turn 70 and a half years old. And if you have not taken any distribution until then, you will be required to start taking distribution based on regular intervals, which is calculated on the balance of your 401k and Roth 401k accounts and your life expectancy. Number 3, IRA and Roth IRA withdrawal conditions. IRA distributions have similar rules to 401k distributions. To qualify for taking distributions from your IRA, you have to be at least 59 and a half years old. Otherwise, you'll be penalized 10% on the amount withdrawn. And all IRA distributions are subject to taxes at your current income tax rate. The IRS can waive these penalties when a distribution is used for qualified medical expenses, health insurance, tuition for higher education, or to purchase your first home. Roth IRA distribution is non-taxable because the money you contributed was an after-tax money, so you will not have to pay taxes on your Roth IRA distributions. And there would be no 10% penalty applied as long as you are 59 and a half years old and have held the Roth IRA account for a minimum of 5 years. If you withdraw a non-qualified Roth IRA distribution, you will be taxed at your current income tax rate, and a penalty of 10% will be applied to the earnings portion, not the contributions. The earnings is the money you made on your contributions, like the interest, dividend, and capital gain. The IRS can waive these penalties when the distribution is used for qualified medical expense, higher education, or to purchase your first home. You are required to start taking IRA minimum distribution by April 1st after you turn 70 and a half years old. And if you have not taken any distributions until then, you will be required to start taking distributions based on regular intervals. This is calculated on the balance of your IRA account and your life expectancy. If you fail to take a distribution after the age of 70 and a half years old, you will be taxed at 50% on the missed distribution. So make sure that these distributions are always taken on time. And if you don't need the money, take it anyways and reinvest it into a Roth IRA. You will not have these limitations with a Roth IRA. Roth IRAs don't have a required minimum distribution. Number 4, consolidation of accounts. Depending on how many jobs you have had throughout your career and the number of 401k accounts you may have collected along the way, you may want to think about consolidating all of your 401ks under a single account, as long as it does not negatively impact your finances. It is easier to manage a single account. Of course, you will need to consult with your plan administrators on the options that you have for the transfers. Once you decide on the consolidation, transfer all of your 401ks to your current company 401k. Ask the plan administrators to transfer your holdings directly to your current company 401k account and don't take a personal check. You may also want to consolidate your 401k accounts into your IRA account. Again, as long as the consolidation does not negatively impact your finances. If you decide to consolidate your 401k into your IRA account, ask your 401k plan administrator to directly transfer your money into your IRA account. You don't want the 401k administrator to cut you a personal check because you would have to pay income tax and penalties on the full amount. Ask them for a direct transfer. It is possible to accept a personal check as long as you deposit the money into your IRA account within 60 days. But to be on the safe side, have the plan administrator transfer the money directly to your IRA account. Here are some do's and don'ts about consolidation. You can't transfer Roth 401k into a traditional IRA because the Roth 401k is an after-tax retirement account and an IRA is a before-tax individual retirement account. You don't want to transfer your traditional 401k to a Roth IRA because if you do, you'll have to pay taxes on your total 401k holdings at your current income tax rate. You can transfer Roth 401k to a Roth IRA, no problem. Number 5, distribution plan. Add up all the money available for your retirement from your 401k, Roth 401k, IRA, and Roth IRA, and let's call this total retirement savings. And now, calculate your anticipated life. Decide on your retirement age, the age you want to retire, and subtract it from the average life expectancy of 85 years. 85 years is the current average life expectancy. In other words, anticipated life equals 85 minus retirement age. Divide your retirement savings by your anticipated life. This number will give you the retirement savings distribution that will be available on an annual basis for the duration of your anticipated life. Then divide the result by 12 to give you the retirement savings monthly distribution. Now add to your retirement savings monthly distribution to your eligible Social Security monthly payment. The total will give you your available money for retirement on a monthly basis. Deduct income tax from the available money for retirement. This will give you the net money available on a monthly basis after tax for your retirement income. I hope this number, your retirement income, is equal or greater than your retirement monthly expenses. If it is, then great, you can retire. All you have to do now is to decide which retirement savings to cash out first. If your retirement income is less than your retirement monthly expenses, then the following can be your options. Number 1, reduce your retirement monthly expenses. Number 2, use other savings if you have them. Number 3, sell some assets like your home. If all of these options don't work, then perhaps you can't retire now and you need to work a bit longer. In conclusion, retirement decisions are never straightforward. There are many options that you would have to consider to come up with the most optimal decision for you. Keeping things simple, however, is always a good idea. Your primary income while in retirement could be your Social Security and whatever you have saved in your 401k, Roth 401k, IRA, and Roth IRA. So I recommend that you do your research and become knowledgeable on how these retirement plans work. Your happiness during retirement will depend on it. I hope this video made sense to you. If it did, please share it and hit the thumbs up. Tell me what topics you'd like me to cover next by leaving me a comment in the comment section below, and I will try my best to do it. Please subscribe to this channel and hit the bell button. This way you will know when I will release the next video. Please don't forget to download the retirement budget form. I believe it can help you in a big way to figure out your retirement finances. I left you the link in the description section below. Thank you for watching and see you next time.